Global shifts, local impacts. We connect the dots so you don't have to. From the BizNews studios, welcome to BizNews Daybreak for Thursday, the 19th of February 2026. I'm Alec Hogg, and here is the context you need to win the day. Well, a mostly green session on Wall Street last night. S&P 500 index up 0.5%, Nasdaq up 0.75%. But some of the stocks in the BizNews portfolio had a pretty good session. More than a 3% gain for ASML and Uber, and also some 1% plus for Palantir and Amazon. All of those details you'll be able to get on the BizNews website. Just go along and click on the share prices and the BizNews portfolio segments. In the Johannesburg Stock Exchange, again, a good day here. A bit of a rebound from Afrimat that was down 8% earlier the day before yesterday, which was, of course, Tuesday. It picked back 2% yesterday, but still pretty badly down on the week after that trading update. Prosus, though, had a good session, up by 3.33% after being under quite a lot of pressure for a while. Sasol is really going in the right direction. We'll have more reasons for that coming up as the oil price is now starting to bump higher. And Sasol's share price is now at its highest level in 18 months at 128 Rand a share with a 4% gain yesterday. And First Rand sitting just below 100 Rand a share. And this is an interesting turnaround because First Rand, well, it started moving and about a year ago when it was 71 Rand a share. And it's been quietly going higher. And it last night, yesterday afternoon, closed here in South Africa 3% better at 98 Rand a share. Now, when banking shares go higher, it tells you that things are moving in the right direction for the economy generally. So green shoots, some people look at it and say, is it real? Well, when you see the banking stocks rising, that is telling you that there is something very real happening. So good news, generally speaking, if you want to look at it in a sober perspective. But let's go global now, and here's the very latest overnight news from our partners at Bloomberg.
Minutes from the last Fed meeting show officials worried over inflation, and several members suggested the Fed may need to raise interest rates if inflation stays above their goal. Here is Bloomberg's Michael McKee.
The focus of the January meeting on inflation largely, rather than jobs, and concern that bringing it down had stalled. Officials anticipated inflation would move down this year, but the pace and timing remained uncertain.
That is Bloomberg's Michael McKee. Now, at the same time, these minutes show a vast majority on the Fed's committee judged the downside risk to the labor market had moderated in recent months. And one group of policymakers was embracing a view less open to additional rate cuts, at least in the near term. Meta CEO Mark Zuckerberg took the stand at a landmark trial over social media addiction, and he said it's difficult to keep kids under 13 off Instagram. Now, this case involves a 20-year-old woman who had an Instagram account when she was 9 years old. Her attorney said her addiction to social media exacerbated depression and suicidal thoughts. Incidentally, this trial is expected to run through the end of March. Billionaire businessman Les Wexner told a House panel he did visit Jeffrey Epstein's private island, but Wexner said at the time he was not aware of any sex trafficking operation involving Epstein. Now, these comments were part of Wexner's opening statement made in a deposition to congressional investigators provided to Bloomberg News by Wexner's attorney. Here is Bloomberg's Mike Dorning.
The Democrats were very critical of his testimony, at least at midday, saying that he seemed to be unable to recall very many key details. And they questioned why the FBI and the Justice Department never sort of questioned him, given his multiple connections with Epstein. In fact, a lot of Epstein's sort of financial wherewithal came from his relationship with Les Wexner.
That is Bloomberg's Mike Dorning. Crude oil rallied today on a report that American military intervention in Iran could come sooner than expected. Axios reported any U.S. military operation would likely be a weeks-long campaign rather than a pinpoint operation similar to what happened last month in Venezuela. Here is White House Press Secretary Caroline Leavitt.
The president has always been very clear, though, with respect to Iran or any country around the world. Diplomacy is always his first option, and Iran would be very wise to make a deal with President Trump and with this administration.
Axios also reported the Israeli government is pushing for regime change in Iran. Today, WTI crude oil was up 4.6% in New York, trading to $65.19.
We'll have more coming up on those Fed minutes and what that means for interest rates, and Zuckerberg taking the stand in the social media trial. I didn't share with you the Rand. It's something that many of our tribe like to know about. Well, the Rand's a little weaker this morning, 16 Rand and 4 cents against the US dollar. And that comes on the back of, slightly lower gold price, just below $5,000 an ounce. For the Bitcoin faithful, the hodlers, well, you're going to be having to hodl in there for a bit longer. It's just below $67,000 a Bitcoin, now down by 1% overnight.
Finalizing your February tax planning? Jaltech's latest Section 12B solar investment offers taxpayers a tax deduction of up to 230%. In simple terms, for every Rand invested, up to 1 Rand can be deducted from your tax bill, while you continue to earn income from solar assets. This applies to both income tax and capital gains tax. Visit jaltech.co.za to find out more.
South Africa is mourning the loss of a true visionary today. Clem Sunter, the renowned futurist who famously mapped out our country's transition to democracy with his high road scenarios in the late 80s, has died after a battle with pancreatic cancer. Clem spent his life reading the flags of the future, but perhaps one of his most critical warnings went unheeded. In this interview that goes back to 2020, in the height of COVID, he cautioned against the growing global trend of making climate change the sole priority at the expense of economic development. As you will hear, he argued that while the green flag is real, in a developing nation like South Africa, we can't simply abandon growth. He warned that our immediate survival depends not just on saving the planet, but on saving the economy by unleashing our entrepreneurs. But he also waved a very, very strong flag to say, let's pay attention, because Generation Z is looking at climate change as an existential threat. Here's Clem.
Well, the crunch, Alec, is the environment. You know, I mean, that's where Generation Z think totally different to us. I mean, I called it the green flag ever since 1989, when I wrote a book with Roy Siegfried and Brian Huntley, two very prominent South African environmentalists, where they said that climate change is going to be the biggest issue of the next century. And it's not going to be just the gradual warming up of the planet. It's going to be the more extreme weather patterns. And you can see that. You can see the fires in California, in Oregon, earlier this year, south of Sydney. This is desperate stuff. But our generation still puts economic development well ahead of climate change. And as one girl said to me when I talked to the school, she said, you guys don't take the green flag seriously. Because guess what? You'll be dead by the time it'll become really toxic. And so we are going to have to cope with it. And I guess that's why young people have a different mind about climate change, because it is huge. And I know that there are people who say the science isn't there, but I kind of accept that there is a link between what's going on with the greater frequency of fires and drought and all the other extreme weather events. The greater frequency and intensity of those events is linked to climate change. And so young people do think very differently about our planet to us.
And the impact that's going to make? The different thinking?
Well, the different thinking means that as we come out of this pandemic, it is absolutely essential to look at how we can now create a greener economy. And I just wish that Trump would come to the party on this one, because, he pulled out of the Paris Accord. And of course, that's weakened the whole movement to try and create a new economy based on new technologies. But as I said to people, we don't know what those technologies are until somebody like Steve Jobs comes along and says, if we do it this way, we can be much smarter. He did it in the sort of social media field. Somebody like him has to come along and say, this is how we can produce energy. This is how we can, make sure that when we buy products, that the carbon footprint is much lower than before. There are people out there with these brilliant ideas, and we've got to release their imagination.
So let loose the foxes.
Loose the foxes, absolutely. And particularly here in South Africa. And I always end now any webinar or something I do with a blessing. May the fox be with you.
And may the fox be with you too, Clem Sunter. Blessings to his wife Margaret and children Katie, Dave and Rob. Clem was 81 years old. More on those Fed minutes now from Washington, D.C., where Bloomberg's Michael McKee reports from outside the Federal Reserve headquarters. The minutes from the Fed's January meeting were released our time last night, and they delivered a hawkish surprise for the markets. Not that they seem to pay too much attention. For those hoping that the cycle of interest rate cuts was locked in, this report serves as a reality check. As Michael explains after reading through those minutes, the battle against inflation has stalled and the conversation inside the Fed has shifted, with some of the officials suggesting that interest rates might not just stop falling, but could even start rising soon.
Okay, here's the headline in a very newsy set of minutes. Several participants indicated that they would have supported a two-sided description of the committee's future interest rate decisions, reflecting the possibility that upward adjustments could be appropriate. The focus of the January meeting on inflation largely, rather than jobs, and concern that bringing it down had stalled. Officials anticipated inflation would move down this year, but the pace and timing remained uncertain. The continuing rise in prices driven by tariffs, the minutes say. The effects would likely start to diminish this year, and ongoing moderation in housing prices would also help. High productivity growth from technology might also put downward pressure on inflation. And a few participants mentioned that companies were telling them they are automating more operations to try to offset some price increase needs. Most participants, however, cautioned that progress toward the 2% objective might be slower and more uneven than generally expected, and judged that the risk of inflation running persistently above the committee's objective was meaningful. Some cited reports from business contacts expecting to raise prices this year. The labor market, the committee's big concern last year, was less of a concern this year. The vast majority of participants judged, the minutes say, that labor market conditions had been showing some signs of stabilization and that downside risks to the labor market had diminished. Still, most agreed downside risks to the labor market remained in place, particularly as the labor supply diminished. Overall, the economy appeared to be expanding at a solid pace with resilient consumer spending and robust business investment, particularly in technology. Several, though, suggested a lot of that was due to spending by higher income consumers. Lower income spending was soft.
And Hermanus is a man from this windy little town called Yaku. So, other way around. Yaku's from Hermanus. Yaku, we need to talk about your upgrade problem.
I don't have an upgrade problem.
2 Audis, an Opel, a Kia, and a Hyundai. It's 5 cars, Yaku. Denial.
It's just 12 cars. And we buy cars that make it so much easier for you and convenient to sell your car. You want to try it?
Okay, just once. Turn off the cameras. I see how this is addictive. Take 2 of those.
WeBuyCars, the easiest way to sell your car by far.
We turn now to a watershed moment for the tech industry that we mentioned in the headlines earlier. Last night, Meta CEO Mark Zuckerberg took the stand in a high-stakes trial that accuses his company, which owns Instagram, of deliberately designing its platforms to addict children. To help us understand the gravity of this testimony, Bloomberg's Kurt Wagner, who is a senior reporter at the organization and author of the bestseller Battle for the Bird, gives us his insights. Kurt is at the trial, and as he explains, this is not just another lawsuit. It's a signature moment that challenges the very foundation of the social media business model. He compares the legal battle unfolding now to the historic fights against big tobacco and the opioid industry.
This is sort of in the same general vein as those cigarette, tobacco industry trials, opioid industry trials. Like, this is a question of whether these social networks specifically are built with the intention of addicting users, particularly addicting young people, teenagers, to their products. And so this is a real signature moment, I would say, for this industry to kind of be challenged with these allegations, and in Mark Zuckerberg's case, to defend himself and his company against these accusations. It's been highly watched, highly anticipated, and this is just really the first of more than 1,000 potential trials that we could see. There's thousands of lawsuits in this same vein, and so we're paying particularly close attention to this one because the outcome of this could sort of signal what we might see from a lot of these other lawsuits that have yet to be tried.
How do you differentiate, or how does a judge, or how do lawyers differentiate on whether something is addictive, meant to be addictive to kids, or just it's addictive in nature, so it doesn't matter if the person who's using it is 12 years old or 25 years old?
Yeah, I mean, this is why it's such a challenging question. I don't know is the short answer, the answer to this, but I can tell you that what plaintiffs' lawyers were doing this morning with Mark Zuckerberg on the stand was they were trying to show two things. The first was they were challenging him over Meta's enforcement of its age restrictions, basically saying, are you actually enforcing this idea that those under 13 should not be on the platform? And if so, are you doing everything possible to actually do that? And I feel like that's really been maybe the main argument that's been happening, is that they haven't really enforced their own policies on that. Mark Zuckerberg has admitted, hey, this is a difficult thing for us to do. And you may recall, like, this actually ties into a broader tech industry discussion we've had over the last couple of years, where Meta has said, hey, this should be the job of the app stores. This should be an Apple and Google thing. And Apple and Google are saying, no, this is your responsibility, Meta. You have to determine how old the users are on your platform. And so this sort of plays into a discussion we've really heard more broadly across the industry for the last couple of years.
In today's feature, we challenge the conventional narrative of South Africa's democratic transition. Political analyst Moeletsi Mbeki argues that the power shift in 1994 wasn't just about the ANC taking the reins. Instead, he points to a more complex alliance between the African middle class and organized labor as the true inheritors of the state. It's a provocative take on who really holds the key to power in South Africa and how historical class structures continue to shape our political landscape to even today. Moeletsi was in conversation with Gabriel Macon at The Common Sense.
Who took over power in 1994? But it will tell you the ANC. But who does the ANC represent? And then they will tell you, oh, it represents black people. But that's not really the answer. Who took over power in 1994 was primarily the African middle class in alliance with organized labor. That's who took power in 1994. And the African middle class is made up of professionals, but professionals who have no property. The African middle class, like my family, emerged in the middle of the 19th century. But when it emerged, it had property. It owned land. They were allies of the British. The British were very keen for them to become Christians, to become westernized, to become landowners. so that they were like the British settlers, the African middle class. And in the 19th century, the African middle class, especially in the Cape and in Natal, started to grow from peasant agriculture to becoming landowners in the capitalist economy of that era. And the British set up schools for them. Lovedale is one of the most famous in the Eastern Cape. Adams College in Natal was another one of the famous schools for this new emerging middle class. In the 20th century, after the Anglo-Boer War, the British changed and handed power to the Afrikaner nationalists, who, of course, were competitors with the African middle class. For power, we had two elites in South Africa after the Anglo-Boer War. So the British chose to hand power over to the Afrikaner elite, who were mainly landowners, some farmers, but they were not rich or anything like that. So what happened in 1994 is that the African elite took over. So the African middle class took over political control of the state in South Africa.
Yeah.
And they have been running the state for their benefit. Obviously, that's what they had been fighting for. The beneficiaries, if you look at the policies of the last 30 years, have been to advance the interests of the African middle class. First, through the civil service and state employment. Because they own no land, so they use the state for their self-enrichment. So that's what has been happening in South Africa. The state has been ballooning with this new elite, who are the civil servants, and it has also been paying a huge amount of money because the African middle class, their role model for a standard of living are the whites. So they want to have the same standard of living. But because they don't have businesses, they have used the state to acquire that standard of living. So South Africa has a very expensive state, but what makes it expensive is the salaries. It's not investment, it's the salaries. And then because they had an alliance with organized labor, they have then passed laws which favor organized labor. So that's what has been happening in the last 30 years.
Some food for thought, isn't it? Moeletsi Mbeki, Clem Sunter, giants, people who open our minds and give us insights that we hadn't ever thought about. They make us think, and that's what a true leader, a true artist, tends to do. Thanks, Moeletsi. Goodbye, Clem. And now you have the edge. For the full interviews and the details behind these stories, head over to biznews.com. I'm Alec Hogg. Thanks for starting your morning with us. Now go and seize the day.